The Fed Reserve's base scenario assumes orderly monetary easing. At the same time, inflation is expected to further slow down. Sluggish hiring in the labor market is likely to persist. Importantly, the recent jump rate cut of 50 basis points should not be seen as a sign of the same aggressive actions by the US regulator in the future. Further rate cuts are expected to be more modest. After such statements from the Fed Reserve Chairman, the US dollar decisively reversed its course and stopped falling, poised to resume an uptrend. Interestingly, the US dollar index, which monitors the greenback's value against 6 major currencies, began strengthening even earlier, several hours before Jerome Powell's speech. As a result, the US dollar closed the New York session higher, maintaining its gains in the early morning today. The dollar index spent the first half of the day within the range of 100.70 to 100.90, trading higher. Other Fed Reserve policymakers also made statements yesterday. In particular, RAPHAEL BOSTIC, who had previously been a strong advocate for another 50 basis point rate cut, suddenly made a remark saying the step would only be justified if there were a sharp deterioration in the labor market. In his statement yesterday, Jerome Powell even mentioned a particular figure that would trigger such a reaction. If job growth slows to less than 100,000 jobs per month, it will require a closer examination of what's happening, the Fed chairman said. No wonder the significance of the non-farm payrolls for September due this Friday will come under the spotlight. However, considering the fact that no one is expecting a sudden increase in unemployment, such remarks from the Fed policymaker reduce the likelihood of another sharp rate cut. As a result, the US dollar gained ground in response. According to the FEDWATCH tool today, the markets assessed the probability of a rate cut at the November Fed Reserve meeting as follows. Only 35% considered a 50 basis point cut, where the majority, 65%, now expect a less drastic 25 basis point rate cut from the US Central Bank. Of course, any speech by Jerome Powell is accompanied by the disclaimer that the regulator will make its decision by carefully evaluating incoming data, changing outlooks, and the balance of risks. At the same time, he pointed out that monetary policy would gradually shift toward a more neutral stance if the US economy develops in line with the forecast. In other words, it will move toward the so-called soft landing. These prospects are boosting demand for US stocks, which was reflected in sentiment on Wall Street. The S&P 500 index closed yesterday's session higher, marking the fourth consecutive quarter of growth. The index also opened today with the gains trading in the intraday corridor between 5,700 and 5,765 points. Today, dollar-denominated assets and the greenback strengthened even further on the back of news from overseas. The annual inflation rate in the Eurozone sank below the target of 2%. According to preliminary data, the CPI grew by 1.8% in September. Following the 2.2% growth in August, analysts had projected the annual CPI to be at 1.9%, but not at the lowest level since April 2021. This drop in inflation below 2% sets the stage for further monetary policy easing, but not immediately, rather in the near future. Previously, the late rate cut by the ECB allowed the single currency to remain at the peak of the uptrend channel, and now the euro has to retreat. So the euro was rejected off a 5-day resistance and had a hasty decline, trading in an intraday corridor of 1.1102 to 1.1147. But the key resistance for the euro-dollar pair is still the round level of 1.12. However, today it seems less realistic than yesterday. Analysts assume that the stagnation the euro-dollar pair has formed below this level in the face of regrouping trading forces, still indicating a bullish sentiment among market participants. Besides, the euro could gain upward momentum today. In this case, and if the instrument settles above the landmark of 1.12 later today, the buyers may have the opportunity to test the medium-term trend high of 1.1276. Otherwise, the euro-dollar pair is expected to fluctuate around the current levels. The odds are that the optimism of the US dollar buyers could dissipate later today, and the reason for this may be fresh statistics including on the labor market. Experts from the international analytical company S&P Global reckon that the US manufacturing PMI should decrease to 47 points. The number of job openings in the US is also projected to decline. The report records data for August. However, given the hype around the non-farm payrolls, every sign of a weakness in the US labor market will have a bearish effect on the US dollar. For now, with the dollar in favor, assets opposing it are mostly trading lower. Brent crude futures are also in a pullback phase from the support level of $70 per barrel, with bearish sentiment among speculators. And this trend is confirmed by the muted growth in long positions, which is preventing any rally of the Brent price. Thus, if the price returns to 70, there is a high probability of a breakdown and further moving along the bearish trajectory. For now, traders continue to view the scenario of retracements. At the same time, external factors are pointing to a potential rise in oil prices. The main catalyst remained the escalation conflict in the Middle East, which retreated both in the production and supply. As a result, the risk that OPEC and its allies may decide to abandon its planned increase in the oil output rates growth day by day. If US oil inventories decline lower, such a move would be a shock to the market, potentially leading to an explosive and difficult to manage rally in oil prices. The Russian ruble is now less and less correlated with the oil market. The ruble faces other issues. Much will depend on whether yuan trading continues on the Moscow exchange after October 5. On this data, the US Treasury Department's ban on such operations is set to take effect. Thus, the ruble has abandoned a wait-and-see approach. After a sharp and sudden jump in the dollar-ruble pair, the price has returned to the range where it has been trading for the past few weeks. Now, investors will closely monitor statements from policymakers, including from the People's Bank of China. According to China's officials, consultations with the Bank of Russia are currently underway to maintain the current trading regime. In other words, we will see any significant changes to the ruble situation by the end of the week, although trading will likely be accompanied by sharp fluctuations. At the same time, active buying is going on with the yuan. This is evident from the fact that the yuan-ruble pair is aiming to reach a new local high in the bullish cycle. Under current conditions, if the price settles above 13.30, it may indicate further growth toward the local high of the uptrend. Importantly, the flood of news of fresh fundamental factors could disrupt the current forecast. Therefore, it's crucial for interested traders to closely monitor market news and other developments. That's all for today. We monitor developments in financial markets. Subscribe to our channel and stay up to date with the latest news. See you tomorrow.